The debt to ratio.
Debt to income ratio, right?
Yeah.
So you could see, based on somebody's income, what we could do to lend them money. If their debt to income ratio is too high, what do we have to say? Well, we hate to say it, but we got to deny them. But before we deny them, what do we look to do? We look to see if there's anything we can do with their credit or their debts that they owe or anything like that. And sometimes we look for additional income. Where could we find additional income? Gift is a down payment. So maybe they're getting child support or they're getting alimony. What about this? What if they're looking to buy a two-family house? We can use 75% of the rental income to help qualify them. Pretty cool? In an FHA loan, by the way, did you know that we could use a non-owner occupying co-borrower? So grandma's got $4,000 a month coming in. She doesn't need all that money. Her credit's, we don't care about her credit because it's okay. We're going to make the loan to the grandchildren. They're going to put her on as a non-owner occupying co-borrower. We'll use her income. So she doesn't live in a house, but we'll use her income. Pretty cool? It's a great deal. Hi, how are you? Looking away is not going to help you.
I learned of a few books to read.
A few books to read. Without looking, can you remember any of them?
The Stress Test?
Stress Test, Timothy Geithner. He lives up in Westchester now. It's a great book. It's all about the finance. By the way, they did a great thing. So look, and my friend here knows that he's liberal, I'm conservative, but I'm going to say something that you're probably going to fall down.
I'm ready.
Ready, Leo?
I'm ready.
President Obama did a great job when he came into office with the financial collapse that was there. You guys have no idea how bad it really was. And he listened to Timothy Geithner and other people, and they put more money in the window. They helped Wall Street. They bailed out AIG. And a lot of people say, oh, why are they bailing out all these banks? It was the right thing to do. And he could have said no. But he took the advice, he did the right thing, and they powered through it. Read that book, Timothy Geithner's book. I think he did a great job. And it doesn't matter, Democrat, Republican. The bottom line is that all presidents do good stuff and bad stuff. That was a good thing that he did to help us out. Read that book, you'll really learn. Are you making a note of that? You can't believe that I just said that, right?
I have it on, I have it
I'll hear about
recorded
at
too.
home. All right, one thing that you learned today.
To bring dollar bills to your next class.
You didn't bet $1, but I guess you did. All right, well, awesome, I like that. All right, one thing that we taught today,
The loan to value ratios.
loan to value ratio, interesting. How long have you been in the business?
Just about a year.
A year? Okay, so we let you off the hook. 2 years or less, I let people off the hook, but pretty cool. One thing that you learned today.
Grossing up tax-free money.
So some tax-free income, we can gross it up. So we had, who said they did first-time homebuyer seminars here? Somebody was telling me earlier, I think it was this class. No, you do them? So we did a first-time homebuyer seminar. We don't put them together. But we have loan officers that say, hey, I'm doing a first-time homebuyer seminar. Can you come speak at it? We have some really good real estate agents that work with us. I got one guy, I can't remember his name. He lives in Bedford-Stuyvesant. And he does, a couple of times a year, he'll do a first-time homebuyer seminar at the Bedford-Stuyvesant Public Library in the basement. What he does, he has all his agents stand by the subway system, and people going to work in the morning, they hand out flyers, and when they're coming home, they hand out flyers. Hey, this Saturday, 12 o'clock, come, we're having a first-time homebuyer seminar. They'll get 15, 20, 25 people to show up to the seminar. So I went there probably about 6 months ago with one of my loan officers. You're going to laugh when you hear his name. His first name is Josh, but his last name is Rifa. That's his real last name, Rifa. Josh Rifa. Nobody forgets. Anyway, Josh and I went, and we spoke. And there was a woman that was sitting up front. Did not think she could be qualified to buy a house. There were basically 3 people that we were able to get qualified to buy a house there, but they didn't think they were qualified. Anyway, so we're there with the real estate agent. We asked her, what does she do for a living? She worked for American Express for 25 or 30 years. Is that a long history?
Yeah.
She had a 401k with $150,000. Not a lot of money, but nothing to sneeze at. She made good money. She made $65,000, $70,000 a year. So we're talking to her. She was looking to buy a little condo. Problem was, where she was renting, she had a disabled son. She was collecting SSI income. SSI income is tax-free. It's for life.
Oh, really?
We said, yeah, he was permanently disabled. So we said to her, listen, did you know that we could use your son's income to help you qualify for a house instead of a condo? She said, what? So then Josh said to her, hey, you know, if you buy a two-family house, we could use the income and get you a bigger house and a two-family. You could live downstairs, collect the rent from upstairs, and now you're living in a house that's almost going to be rent-free or cost you less than you're paying in rent. You know what she said then?
I love you.
What if I buy a two-family house and I live in the basement with my son? See, she went from not thinking she'd buy anything to thinking like an entrepreneur. What if I did this? Isn't that great? So she wound up buying a two-family house, and you know, things are good. She's not living in the basement, but it's a great way to do it. She said, I can have income coming in for both, and we can live down there. She says, can I do that? Well, first of all, the answer is if it's your home and you build it out, yeah, technically, even though there's no CO, people do that. But if you know the 5 boroughs, are there many, many illegal apartments everywhere? The appraisers know this. You got to get rid of the stove and all that stuff. It happens all the time. But did we change that person's life? We did, because their thinking changed. So these are the kind of things that you can do. You can help people with, you know, their lives by buying homes. And is buying a home a really cool thing? Okay. I'm going to ask 2 more people a thing, and I'm going to show you a little example of renting versus owning. Would you like that? What's that? Am I going to show you the CLTV? No, don't worry about it. You got the LTV is good enough. All right, so let me ask a couple more people. Hi, one thing that you learned today, sir?
About the credit report.
About the credit report. And if you came to my credit repair class this morning, who was at that class? Did you guys learn a few things about credit that you didn't know before, right? So see me next year for that course. One thing you learned today.
Seller concession.
Seller's concession. You learned a little bit extra explanation on how it is. Excellent. Hi, one thing.
She took my answer.
You want to get it? What was her answer that
The
she...
answer was, when you have taxable, non-taxable income, you can add on to that.
We can gross it up.
I didn't know that.
Very good. Excellent.
Hey Doug, got a question.
Yes.
And when we gross it up, do you, because I know you mentioned 25%, right?
FHA usually is 15%. Sometimes we can get away with 25%,
Okay.
but a lot of loans are 25%.
So the math of that, would you times that by 0.15 or by 0.85?
No, so there's 2 ways.
Divided by 0.85.
There's 2 ways to do the math. So let's do an easy one in our mind. Somebody gets $4,000 a month in non-taxable income, right?
Right.
We can do this. On your calculator, you just go plus 25%, and that'll come up to $5,000. That's one way you can do it, right?
Right.
Or you could do it $4,000 times 25%. That'll come out to be what? 1,000, because 25% of 4,000 is 1,000.
Okay.
Then you take the 1,000 and you add it to the 4,000, you get 5,000.
I was thinking of the different.
Well, you can do the last way, which the way I do it is this: $4,000 times 1.25. That equals $5,000. What was the way you were thinking?
I was thinking taking it, 4,000 divided by 0.75.
Do a calculator, somebody. I think that's going to be close enough. In my 4,000 divided by 0.75. He's doing the inverse there. You didn't cut classes in high school, did you? If he was on the Beverly Hillbillies, he'd be general. I know how to do my gazintas. How many times 5 is into 10? That was very good. I like that. Do that for me.
That's 53.
53, so it's not exact. It's not
Actually,
exact.
it's based on the gross. That's
Yeah,
based on the
yeah,
gross.
right. Exactly. So I never thought about doing it that way, but now I would know to never do it that way. So you know what, I'm going to give you $1 because I learned something today that I didn't know before I got here. All right? All right, you got it. Thank you very much. I appreciate that. All right. Hi, yes.
With the multifamily units, you said 2, could it be up to 4?
Yes. If you're owner occupied and you're living in there, we use the other 3 incomes. Yes.
What
type of documentation do you guys ask for non-taxable?
We ask for everything. Well, if it's non-taxable income, we want the award letter. Where is it coming from? Pretty simple, right? Okay, let's go over here. One thing that you learned today.
Oh, what we just talked about.
Okay, cool.
Yeah,
One
yeah.
thing that you learned.
The LTV,
The LTV. One thing that you learned.
the lender's credit.
The lender's
Comes
credit.
from-
Nice, very good, because you asked a really specific question. That was a really good question that you asked. One thing that you learned today.
Clarity on the lender's concession.
Concession, excellent. One thing that you learned today.
Not to bet money with.
Yeah, not to bet with me, right?
I learned to bet money with them.
By the way, we could do a private craps game a little bit later. All right, one thing that you learned today.
The formulas.
Formulas, can you tell me the formulas?
LTV formula,
Yeah, that's the acronym. What's the formula?
loan to value.
No, that's the
Actual
acronym.
run.
What's the formula?
Value.
Loan divided by value.
Yes.
Loan divided by value. You see I went over it 500 times and you're like, why are you doing it so many times? And he still doesn't remember the formula? That's why I do it 100 times. Yes?
I've learned
Yes?
self-employed that write off most of their income and pretty much shown that they can't buy, you can add some of this income back to their...
We can add stuff back in. Very good, excellent.
But I have a question.
Yes?
We spoke about the points, the interest that you can buy points,
Yes?
but never done conventional loans. I know in the future you can...
You can do discount points on any kind of loan.
Up to three.
No, that's a seller's concession. It's different than discount points.
So discount points...
Discount points are buying down the interest rate. It's prepaid interest on a loan. Seller's concession, on some loans, 3%, on some you can go up to 6%.
No, seller concession is up to 6%, but when you buy the rate down, or you buy points, what we call it, in FHA you cannot buy more than 3 points.
Right, because it's a law of diminishing returns.
Okay, so...
In the old days, the lender used to keep those discount points, or most of them. So I would charge you 5 discount points and
Is
keep
there any
3.
limit on...
Well, today now, discount points have to actually go to discount the rate. So we're not allowed to keep the profit on that. Yes, question?
How do you figure out the break-even point, to buy down the points versus not?
So let's say your mortgage payment, your principal and interest portion of your payment, what goes to your mortgage, is $3,000 a month. If I was able to reduce your interest rate so that your payment now is $2,700 a month, how much are you saving every month? $300. How much would you save in a year's time? In 2 years? $7,200. So I would not want to charge you more points to discount your rate more than $7,200 on as an average. So if you bought that down for $4,000, is that great? You're going to have your money back in 13 or 14 months. If it costs you $10,000, we might do it because you might say, Doug, I'm buying this house. We're living here with the kids and I'm not refinancing for at least 5 or 8 years. Then you understand what's going on and we'll do that because it's less money out of your pocket every month. Fair enough?
Yep.
All right, good question. All right, yes?
Does that same ratio work with someone who, say, owns their house outright and then looking